And just like that, here we are. What's going on, everybody? It is getting through the first week of October, the second week of the shutdown of 2025 here. And you know what? The markets don't give a bleep, right?
This reminds me of like when you cancel a subscription that you forgot about. It begs the question, what were they doing to begin with? I'm serious. Like I don't see any disruption. My trash is still getting picked up. Banks are open. What does the shutdown really entail? I think, for so long, I'm being truthful about this in all seriousness. Think about how many times we've narrowly missed the shutdown. Okay. Just think about that. Like it's happened 5-6 times I can think of. And the media always paints it out to be how we, we're Indiana Jones and pulled our hat from within the boulder and narrowly escaped death. And now that we're 2 weeks into the shutdown, we're kind of looking around like, what was the big hubbub about?
What's all the hubbub, bub? Exactly. Yeah. And so here we go. Markets continue roaring higher. Basically, gold. I think it's like, gold and silver up something like 55 and 65% respectively for the year. Gold breaking well above 4,000. Silver right there at the all-time high, just a few cents below it right now, basically. I mean, Bitcoin sitting right there below this all-time high as well. Ethereum sitting just below its. I mean, it's hard to be sad about the government shutdown unless you're a government employee, because apparently the Trump administration is saying, hey, listen, if you've been furloughed because of this, guess what? You ain't getting retroactive pay.
Well, I mean, I'm going to go to my mailbox after this and find out whether I got any junk mail today. And I'll, actually look at that as a perk if they've alleviated that from my life. So,
But that's all we really get with physical mail.
That's what I'm saying. It's like if the postal service went away, I wouldn't care.
And we get legal notices. It's still required by law to send your legal notices through the mail, blah, blah, blah. I don't know how long that's going to last. But other than that, I mean, we sit here and people don't even, so people don't write each other anymore. Basically, we share reels, right? And TikToks. And that's how people communicate. I mean, it's like we've done this full circle back to the paintings on the walls, hundreds of years ago. I'll leave it hundreds.
Yeah, are we boarding you, Andrew, or is this conversation up to snuff? I mean, you bailed last week on us. You skipped out early the week before, and now you're obviously doing something else. So, I mean, have we offended you in some way? I mean, what is your opinion about said shutdown, or is the United States government shutting down not a big enough deal for you to talk about? Is that
what is it, Nighthawk? Tell us.
Yeah, listen, as the assistant to the regional manager here at Arch
Public, I
have additional responsibilities beyond this podcast.
That's a great out. That's a great out.
So from time to time, I have to engage with those folks. Nighthawk, by the way, is for the high-minded movie enthusiasts here on this particular podcast. So in the film Step Brothers, in the first time that the Step Brothers meet, Dale and the like, they stare at each other, says, hey. One of them says, you got to call me Sex Panther or something. Who knows? And then Will Ferrell's guy says back, oh, yeah? Well, you got to call me Nighthawk. So, that's where the Nighthawk comes from.
Good times.
There it is. And speaking of assistant to the regional manager, I just one of our employees just sent me a screenshot of just the bottom of my square here that says Andrew Parrish Nighthawk. So they already grabbed it. Well done.
Don't they have a job to do? Shouldn't they be working? I mean, really, what's going on here? They're watching you say stuff like this. Is that what you pay them for?
Indeed.
Listen,
yeah,
the show's been, a little bit less than what Andrew considers to be up to his KOL standards. So he has like our employees to make him feel good with comments like so.
Listen, I honor the flag when I wake up every morning, and I also commit to this podcast in the same way. So that's also another movie reference, but I don't know how many.
Stop quoting movies. It doesn't. No one knows but you. I've seen these movies and I have no idea what you're talking about.
We Honor the Flag is from the other guys with Mark Wahlberg and Will Ferrell.
Oh my gosh.
He's on a Will Ferrell kick today, obviously.
Well, it's an important part of the movie where they convince him to do a desk pop. And he won't do a desk pop because he's worried that, of course, you can't shoot your gun in the office to do a desk pop, right? And Rob Riggle, who's playing the guy that's telling him to do a desk pop, he's like, listen, we honor the flag when we start here. And everybody here did a desk pop. He's like, okay, it's a desk pop. And he shoots his gun. And everybody freaks out. And they're hitting each other saying, he really did it. He really did it. And then the next scene is Michael Keaton giving him a fake wooden gun, saying you can't have your gun anymore. You did a desk pop. So
I remember.
You got to carry a fake gun. Yeah. He's like, come on, Captain Gene. He's like, it's not Captain Gene. It's just Captain. All right. Can't call me Captain Gene. That's another movie that, again, from an Academy Award standpoint, did not get the due that it was deserved. All right.
Yeah, I think we probably, need to include in our name Beards and Bitcoin and Cinema or something like that. I mean, we spent the last 10 minutes talking about worthless movie phrases that there is a movie phrase that comes to mind, and I can't quote it, but it's the one that says we're now dumber now that we've listened to you and you wasted our time.
From Adam Sandler there, yeah. Billy Madison, isn't that what it was from?
Yeah, it was Billy Madison.
At no time in the long history of you rambling. Did you get anywhere?
How about that debasement trade, guys? How about that debasement trade?
Well, I mean, the only thing you can control is how much you lose.
You said it before I can get it out of my mouth.
Look at it. It's taken over a year, but he's finally figured it out. Proof that you too, if you're listening, can be a better trader. Just keep listening.
But anyway, I want to hear your thoughts about the debasement deal and
it's funny. Everything markets
it's
tend to be all about
Wall
narrative.
Street's got to come up with a made-up name every time for everything.
Narrative, right? That's what it is.
But so, what is the name? What are y'all saying?
It's debasement. They're saying, just saying debasement, right? They're saying it's this fear of the government shutdown, debasement of the currency, all this stuff going on, and they're saying, okay, now it's the debasement trade. It's just humans adding a narrative to what's going on, but really everything that's happening today is nothing that people like myself have not been talking about for the last few years. With
that's
gold
what I'm saying. What's so special? Debasement trade. So what? We came up with a new name for it. It's the same. You buy assets that go up in value against the fiat dollars that are printed.
Wall Street just given a name to the reason why gold has gone above 4,000. Throw Bitcoin in there now because
silver.
Every significant institution is involved in Bitcoin.
Do you want to know why I think gold and silver have finally cracked the mold? So to speak?
I don't want to know.
Well, you're going to get to know whether you want to or not. Okay. So I think it's been artificially manipulated for a long time. And I think it's a market that can be highly manipulated. And I don't mean manipulated in a conspiratorial way. I mean manipulated by market makers have a difficult job, and they're a for-profit entity, and they make money, and there's scrutiny about how they make money, right? And commodity trading in those markets are very small. The people who know them exceptionally well, and they're highly traded. And futures are highly speculatable and highly traded. And so all of those things, all those levers allow a lot of financial engineering to go on into the price. And you engineer a steady incline price. So why would that be important? Well, historically, because it's been the indicator against inflation. It's been the way in which we kind of hide how many global dollars we've been printing against the petro system and against the petrodollars. If we measure that against the price increase of gold, it looks like it's a very stable increase. But in actuality, it's far outpacing the increase in the price in gold. And so that's not really a used indicator anymore. Most people have, that were born in that era are kind of on their retirement years. And so that's not really how I think the markets look at it now, but that's definitely how the markets used to look at it. And so I think a lot of those manipulative tactics have moved over to crypto and moved over to Bitcoin. And there's new levers and there's new indicators, Bitcoin specifically, that is a far better indicator for people and a far more difficult indicator to manipulate than gold. And so all the attention's been shifted into those markets. And what's taken place as a byproduct? Well, gold's kind of run wild, and silver's, I think, still has a lot to catch up. I mean, it's nowhere near its ratio that it 1 to 1/16 or 1/16 the price of gold. So you look at. I remember as a kid, my dad's a big gold bug, and I remember him telling me, like, gold's going to break $1,000. It's going to break $1,000. So if you look at like $1,000 being kind of that all-time high, and I think then it was 1,300 for a while, we're more than 2 times that. We're 3 times that almost. So look at silver. Yeah, silver's 2x, but it's not 3x. So I think it's going to be the belle of the ball over the next few quarters, to be honest with you. And I think once $50 is tested, broken and through, and then retested, it's Katie bar the door after that.
Well,
that's what people are here for, beards and silver.
Well, since we're talking about gold for the moment here, I did come across, you guys know who Jeff Snyder is, right?
No.
You guys don't know Jeff Snyder? Okay. You also check him out on Twitter there, whatever. But they do him and another guy, they do the Eurodollar University. And so Jeff Snyder, it's Jeff Snyder _EDU. But he put out a post here and he says gold hit 4,000 and it has zero to do with inflation and nothing about the government shutdown. And he says this one is an open and shut case. Set aside for a second how historically gold is a terrible inflation hedge. Just look at how gold has behaved the past few years. And then he goes down through it, going on there, and he says the copper to gold is, bullion as the denominator is the inflation deflation signal. That isn't just flashing deflation, it's a record low deflation. So he actually makes a pretty good argument here. They do a lot of stuff where they're talking about, again, Eurodollar, stuff like that, but he really does.
That was that mouthful. Break down what you mean. What's the punchline?
Yeah, so basically what he's saying is a lot of people get on here and the whole idea about gold is this inflation hedge, right? I mean, that's kind of the thing people say.
I'm trying to look him up. Did you say Rob Schneider?
Jeff.
Jeff Schneider?
Oh. Jeff Schneider. Rob Snyder's been pretty vocal politically here lately, but anyway, but yeah, no. So the thing that people kind of, this is, I guess what I want to bring about is this is that thing where people that are new to markets come in and it's just everybody saying it. So they're like, oh yeah, that's what it is without really giving it any thought. Right. So everybody for a long time says gold is, it rises because inflation, it's an inflation hedge and whatever. And so what Jeff is actually doing here is he goes there and he lists like, sideways, gold was sideways and lower during the worst CPI inflation since the 70s. And he says, why? Well, it's because of reflation. But if you look historically at the points he talks about, I'm not going to go through all of them here, but if you go to his post there and you look through them, what you'll see is gold is actually not an inflation hedge. And it's this deflationary thing that's happening. So when you price gold against copper, where you're looking at that, it is the better way to look at it. But that's a word salad to me. It's
kind of like, who cares? I mean,
here's my point.
If it goes up,
it still has to be an inflationary hedge because it's going up against the dollar. That's what an inflationary hedge is measured against. It's against the fiat. It's not against other commodities. Yeah, copper may have been a better inflationary hedge. Bitcoin, some of the best inflationary hedge. But am I understanding that correctly? Because it's a
what we're talking about when you're talking about the copper to gold ratio. That's what we're kind of talking about here. Yeah. So it's really low, right? And the idea that it's low reinforces that. Because it signals that deflationary environments is where gold outperforms. Okay. So what we're talking about is when inflation really kicks in, gold isn't really usually doing much.
Explain that. Why do you say that? What make? Because I wouldn't agree with that gold shines in deflationary environments. I think everything shines in inflationary environments because everything catches the new cash that's being printed. Therefore, everything goes up in value because everyone has more cash.
Well, okay, so look at gold back in, let's say, if we look at the chart here, let's say the 1980s, where you had the really high inflation.
But that chart is manipulated price. That's my whole point. Is like gold has been the most highly manipulated asset class almost that's ever existed. I mean, you can go look it up yourself, but there's dozens of lawsuits against the biggest market makers, biggest banks in the world every year about their manipulation of the COMEX and the gold price. Like, this isn't a secret. This is a case study. Like, this is case law, right? So the manipulation that's gone on, those charts are not indicative of the real price of gold, is what I would say. I think gold is catching up to its real price. No different than, wouldn't you say that the price of Bitcoin was artificially suppressed through the last administrations?
What do you mean by artificially suppressed?
The innovation, the desire, the access for the common person, the demand was restricted, is the point. It made it more difficult to access it than previous.
Yeah,
than every other asset class, basically.
Access to Bitcoin. Do you think the less, the more difficult access really played that big
yeah, everybody who got into it was an outlier until now. Basically, everybody, the masses don't want to be on the edges of society. Everybody, the earlier you were into Bitcoin, the weirder you are. I can almost guarantee. That's just the facts. Or dumb luck, like guys who found themselves getting paid in Bitcoin for a job.
It should be noted that Tillman Holloway got into Bitcoin in 2012. So telling on himself just a little bit there. I want that.
Listen,
he's worth billions now, right?
My therapist says progress.
I also am more than surprised that Rob Schneider has so much to say about gold. That's something, for some reason, that surprises me. It's a little bit strange.
Listen, him and Peter Schiff are buds.
But the whole time you guys were talking about this, I kept all I could think of was Rob Schneider in the movie saying, you can do it. You can do it. And then the other one that's my favorite is, oh no, we suck again. Yay, we can do it. No, we suck again. Yeah.
What is wrong with you?
Really, it is oftentimes, as I find on this podcast, thrilling conversations about silver. So I'd even beg to talk about Flair at this point.
Hey, listen, what do you want to talk about? TradFi and registered investment advisors and
how about
percentage allocation that they think as a group think that they're prescribing to the universe as a standard that they're going to change next month? Let's talk about your industry for a second. I think we started at 1% allocation because y'all were too wussy to stick your whole foot in the water, and now we're going 4%. Didn't JP Morgan come out and put 4%? You know what? I'm predicting something. Everyone that's so smart in your industry is going to come back in 6 months and go, you know what? I think it should be around 10% allocation. And then they're going to come back in 15%, and we're going to find.
Well, the reason why that's interesting is because that's where all the money is. And there is, when JP Morgan, something that I mentioned in kind of a reply to my own tweet, either late last week or early this week, the collection and concentration of ultra high net worth wealth at the likes of a JP Morgan private bank, which is a huge division of theirs, and then Goldman Sachs wealth management division is extraordinary. So if you've got 50 million or 100 million or 300 million or $1 billion in wealth, in liquid wealth, I guarantee you that you have a portion of that capital at one of those two organizations. I guarantee you do.
Everybody that I know that's had a liquidity event has a JP Morgan private.
you can't get into Goldman Sachs legit wealth management arm unless you have $50 million in liquid net worth. Can't do it. You're not allowed in. So the fact that JP Morgan and Goldman Sachs are coming out with research effectively telling their clients you have to have exposure to Bitcoin. You have to, because
and 4% is the headline, right?
Morgan Stanley was the 2 to 4% number, but it should be noted that Morgan Stanley and Goldman Sachs have been kill each other rivals for the last 50 years, right? So that triple nexus of wealth management, concentration of wealth, certainly here in the United States and then abroad, that cannot be understated. Can't be understated. It is a really, really, really big deal. And
it's a monsoon of money.
Correct.
Yeah.
Correct. And so if you've got, trillions upon trillions upon trillions of dollars of wealth at just those three organizations, again, a 2 to 4% number is a super big deal. Remember that Larry Fink didn't come out, because I kind of paper over this at times when I talk about it. But Larry Fink didn't come right out and say, "Hey, I think Bitcoin's going to 500 to 700K." What Larry Fink said is, if portfolios end up adding 1 to 2% in Bitcoin holdings, it's going to 500 to 700K. Well, now all of Larry's compatriots, all of his colleagues, and all the people that are in his industry and he competes with and sells product to are saying not 1 to 2, but 2 to 4, right? We're headed to 500 to 700K. This is a self-fulfilling prophecy, right? So, that's should we be talking about that? Heck yes. It is a shift. This is something that I mentioned on a different show yesterday. We have gone now from 12 months ago to 24 months ago. You were a huge outlier in the world of finance if you were pounding the table on Bitcoin. You're like, okay, the weird guy over there, he keeps talking about Bitcoin. Yeah, we know he's been right from a performance standpoint, but 80% drawdowns, that doesn't sound like any fun. And who knows, somebody could have, it's the Jamie Dimon thing, all right? Jamie Dimon's still, I don't know, it's weird. I don't want to deal with it. If you want it, we'll sell it to you. But now we've moved. There's been a shift in the past 3 months that says everybody's talking about it. Everybody says allocate to it. And if you're not on that bandwagon, you're the weird guy now. So,
I think that's driven by demand of the demand. Like the people have spoken. They want it, and they want exposure to it, and they like the freedom of it. They like being a part of communities. They can get on forums and say, "I own Pepe." All of the above. Bitcoin is definitely leading the charge, and I think you're right on all those. Your rising tide floats all ships. But I still think blockchain as a whole is bigger than Bitcoin, and I think that to me I think that truth draws me into a lot of peripheral markets that maybe you don't find attractive. But
he's talking about Flair, man.
Vlad finds it attractive. Did you hear what he said at the Token 2049 conference about real world assets and access to U.S. markets will be driven through tokenization. Every exchange will have full integration in the next 5 years, essentially. And he said that the real world assets and the tokenization of those will eat every market. And so, you think about the change that's about to happen over the next 10 years. I do think the rising tide of financial planners and everybody putting money into Bitcoin systematically is going to drive that price infinitely higher. But I do think there's a broader narrative of the blockchain being utilized across, it's like all these big legacy companies launching their layer ones. I mean, think about that. That tells you everything about the future that you need to know. Is like every company is going to have a token at some point. And we called all the first companies scammers that did that. And now it's going to be, a part of the marketing plan by default. Like, you have to have it, and a part of the financial ecosystem. The CFO will be talking about the tokens. And, you know, if you think about the stickiness of the financial data that companies are losing to Visa, for example, why wouldn't you want to harvest that yourself and bring that all under your umbrella, launch your own internal blockchain where you get to keep all the data hidden to your own, you know, like, it doesn't have to be a public, like, all of the things that are attractive to big corporations, I think they're finally getting, you know, hip to the notion of. So I think the markets as a whole, every financial market, but including real world assets like car titles and being able to trade. Like, let's say you wanted to, I'll give you a case study that I heard the other day that got me thinking. And you know how Elon Musk is talking about his Tesla business model where you buy a car from him and you make money on it instead of losing money, like flipping the narrative of a depreciatory asset to an appreciatory asset. You know, what if the blockchain allowed you to trade vehicles and accumulate them and sell them as units? And so you could buy fleets, you could apply capital almost like you would to a stock, but in actuality, you'd be buying revenue or dividends attached to individual cars in specific geographical areas that you're wanting to bet on. Like, that's a market that's going to exist, and you're going to be able to bet on new development. You're going to live in a city, you're going to be in a peripheral market of the city. You're going to go like Nashville. When I was living there for 10, 15 years, I was going, goodness, this thing can't stop growing. It's like the fastest growing city I've ever seen, other than Austin, you know, when I was in college. But if you could get ahead of that by owning the, you know, or monopolizing the fleet of Ubers that exists in that market and dominating that market from the jump, you know, it's going to be hard for somebody that doesn't have capital to penetrate, and it will be something that you essentially have created on your own, and then you become the market maker in, and, you know, everybody can buy, sell, swap, like those type. That's just one example of real world yield that's going to be then attached to securities that are offered as coins, offered as tokens, instead of some stupid meme coin. But, you know, we had to start somewhere. I'm taking a screenshot of my screen right now. I'm making a meme coin of Andrew.
Of Andrew. Well, you know, so listen, so everybody, of course, you know, is worried about the top being in, right? And the top coming in soon and all these things. If we look historically at the financial markets, right? We look like the last 60 years with, say, the Dow. Bull markets generally tend to last on average, what, about 8.5, 10 years, somewhere around there, right? Now, sometimes it's a bit longer, where we had from when we came out of the 2008, 2009 great financial crisis there. So we went off, you know, 11 years basically into COVID, which was one of the shortest, probably the shortest lived bear market in history. But, you know, and then there's times where it's, you know, it's only been a couple of years. So right now we're looking at the last bear market in the Dow there was just around the end of Q3 of 2022. So we're about 3 years into that now. So if we look at the average being 8.5 years, what do you think that does to people if we kind of just continued on to that, if we continued for another 5 years before we got a real correction, and maybe driven, at least in part, by this idea of what you're just talking about there, you know, real world tokenization happening and really just kind of continuing to push the floor higher?
I think the markets have developed. I think that paradigm has shifted. I think that people are so hungry for immediate satisfaction that all the time frames have been shortened. I don't think a lot of people do long-term financial planning anymore. I think they have side hustles. I think they place the capital of those side hustles in investments that they hope make a meaningful impact to their lives. So I think that the markets are shifting to reflect the the psychology of the participants, which is what a free market is, right? It's like what we want. And so I just don't look at the same. I don't look at it like that. I look at it as like, how long has the bull cycle been for NVIDIA? How long has the bull cycle been for Microsoft? How long has the bull cycle been for the technology companies that have paved the way of the innovation that we're literally on right now? This technology didn't exist until very recently. And when it did, it stunk. You definitely couldn't do a broadcast like this. Now it's integrated into all the, email suites and all, it's native almost. That, we're on the curve. And so we're at a different section of the curve than we've ever been. What do I mean by that? Well, there's been more money that's been printed in a shorter period of time than ever before. The market has to deal with that differently and will deal with that differently than it's ever dealt with it before. And what does it deal? How does that look? Well, easy come, easy go. Like people, if you polled America 50 years ago, how many people would be the prudent TradFi guys that are like going, I don't chase risk. I'm very risk adverse. 7% yield is fantastic for me. That's all I'm, they're only in bonds. Those days are gone. You talk to everybody out there and they're going fix and flips and, leverage to the teeth on 5 side projects that they've got. Like they want the juice. And, these markets are shifting because the people are demanding them to shift. And I think TradFi is finally going, there's too much money to be made here for us not to shift. Let's just go ahead and figure out how this infrastructure works. Let's make the appropriate acquisitions, mergers, partnerships, and let's start bringing on customers. Look at the credit card companies, man. They've never been talked about more in the history of mankind, other than in the 1990s Winter Olympics when they were the prime sponsor and had some good commercials. Like, it's a new game.
I'd like to interrupt this podcast with a product placement. I went ahead and bought the iPhone Air. This thing is really cool, man. Like it's really, really, first of all, it's super, super, super slim. And it's a new product for them, first time in 5 years. And the battery life is incredibly long for how slim it is. So I just,
when we finally have that internal meeting to kill this show, it's going to be because of these types of sidebar commentaries.
So I just want to tell people out there that this is worth buying. It's a really, really good product. I was actually thinking to myself earlier today, I'm like, you know what? I could have cared less about a new iPhone for the last 5 years, even though I always got one. But I really love it.
Put the promo code in the bottom on the ticker so that you can get your commissions from AT&T.
Well, maybe Nighthawk can talk a little bit more.
Yeah, from this show, if you order an iPhone Air and reference this show, they put a free version of Your Life Has Been Forked by Christopher Hink, the forked thing that he wrote. So I'm just letting you know it's worth it. All right.
Well, maybe Nighthawk can get serious here and discuss, building on what Tillman was saying there about how the markets have changed. The idea that we've gone from what do you call it, to ETFs? From now you got me lost my train of thought here.
Yeah, you're all forked up now, aren't you?
Man, I'll tell you what is it they used to have that's not a big thing anymore now?
You guys were unhappy I was on vacation last week. Hey,
what is it?
No, I never said that.
Mutual
Don't
funds.
Put words in my mouth, buddy.
But maybe you can talk a little bit more about this.
The
changes that are happening.
Chris. Innovation never stops. So we go from cash to credit cards to things like mutual funds where you're pulling investments, mutual funds to ETFs, which are tradable all day. Mutual funds would just price at the end of the day after they collected all the prices for whatever was in the mutual fund. ETFs are the same as mutual funds, except they trade all the time, every day. We are now going to move to 24/7 trading. So just as interesting as anything else is intercontinental exchanges, which own all the exchanges across the world, putting $2 billion into
I
Polymarket.
stayed at those hotels. Those are good hotels, man.
Yeah. So Polymarket again is so they're going to take the technology from Polymarket, and Intercontinental Exchange is they'll find a way. All their exchange is going to be open all the time.
What's Polymarket?
Polymarket?
Yeah.
It's the betting site, dude.
I just like to hear you talk about other degen projects that are merging their way into TradFi.
Indeed.
Yes,
indeed.
You've been ignoring all the signs for all this time, and now you just forced into a show that causes you to face those demons. Like it's coming.
Yeah. So I am getting positive feedback here on the comments. AP is on fire today. Yeah, that's correct. That
no,
is,
look who's saying it.
It's
Bernardo saying it. Don't take that seriously.
That's Luca.
That's our employees. I don't know. I don't believe we have an employee named Bernardo. Okay, I don't think we employ.
No, I know Bernardo. He's with us at TWC. Trust me.
Listen, Bernardo probably looks like you and wants to see himself in you. So he.
Anyways, so all that being said, no, I've said for a long time that crypto is pushing the levels of innovation across traditional finance. So
I was just making a point, kind of tongue in cheek, but my point, is that the most legitimate market ownership company. What are they called? What is it?
Intercontinental Exchange, ICE.
So they're an exchange.
Yeah, well, they're a collection of exchanges.
Collection of exchanges. The most significant, the one that has the New York Stock Exchange, all the big ones.
Yep.
The most legitimate company out there is dealing with Polymarket.
Yep.
That's my point. Like that's a strange bedfellows right there. I'm telling you what, unless you understand what they're doing together, and then it makes all the sense in the world. Like you said, 24/7 markets, tokenization of everything, smart contracts running the whole show.
I came across and I mentioned this before, another podcast maybe 6 to 9 months ago of a guy that I used to deal with in TradFi all the time. And it's a well listened to show. It's one of the top shows. And they were kind of joking that, in your Charles Schwab account, you're going to be able to, make bets like on the New York Giants, because that's going to be somehow integrated into your brokerage account. And they're like, this sounds ridiculous, but the reality is it's probably going to happen. And this is kind of part of that narrative that, because Jeff Park talks about this all the time, and he uses some language that I don't love, but it does a good job of explaining it. It's like the retardation of financial society, like the degenerative stuff that we're talking about. Like Tillman just said a little while ago, the whole financial planning thing every quarter. There are a lot of people that do that, but all the people that do that are 65 plus. People that are 35 to 50, they're just, where can I go and maybe get my next whatever X? And what comes with that is a serotonin and dopamine hit too.
Can I interrupt you for 2 seconds? I think the difference is one mindset is, how do I keep this house? One mindset is, how do I buy a house?
Yep, correct.
Totally different mindsets. You know what I mean?
Yeah. So, we're going to get to a point where, you're going to have the ability. Listen, if we're talking about 3x levered crypto ETFs, which over the course of the next 12 months will get approved, and we're also talking about pudgy penguins type of ETFs, right? How far are we away from some sort of ETF that's associated with Polymarket action?
Well, Robinhood offers sports betting now. I mean, think about that. I mean, that's a weird merger in and of itself. Like they're basically merging sports betting sites with traditional markets,
right? So
and crypto.
Yeah, we're again, if 4 years from now, markets trade 24/7. That's going to flip on its head. So if you're a meaningful family office that is managing, $74 billion in assets for 6 families, what do you think those families are going to offer, are going to want? They're going to want there to be a couple folks on the desk in the middle of the night, because if something happens and they want to talk about it, they got to have somebody to call. So that kind of thing is going to happen.
Well, there's 2 things to pay attention there that I will note. The federal court system just deemed that meme coins are not securities, and that NFTs are not securities. And they also have already set court precedents that DeFi yield farming is not a taxable event. Now, think about that, and also think about the fact that the president of the United States family started a DeFi exchange. That obviously that's where the market's headed. Is even I think these treasury companies are going to be yield farming through DeFi protocols. I think the U.S. government's about to go smart. I think our financial system's going to be DeFi smart contract centric, and most of these institutions, including our banking system, are going to be not human dependent like they have been over the last 100+ years.
So to that end, when we get to a point in some asset cycle or some trade cycle, once Wall Street is quote unquote named a trade, aka debasement trade, the upside in that trade is over, right? So I don't think gold goes much higher than it is right now. Does it get to 4,300? Okay, maybe, but it's not going significantly higher than it is right now. It'll print a big number for 2025. And then it'll print next to nothing in 2026.
I disagree.
Yeah,
but I just think we have to print faster and faster. It's like me saying this. Okay, I'm gonna bet on the sweat drops on the bottom of the floor on a treadmill, and you're going, okay, let's bet on it. And I go, I bet you it's going to be more than 100 drops, and you go, I'll take that bet. And then I just keep cranking the speed of the treadmill up until there's more than 100 drops. The printing press is running at a pace that has to ever increase. Every single month, every year, there has to be more and more cash printed. Why? To make our debt easier and easier to pay back.
Well, now now you're talking about a 3 to 5 year maybe time frame. And gold can be higher over that period of time.
That's what I'm talking about. Yeah, I'm not in disagreement. We may have a pullback. If we're talking about short term, I agree.
25 versus 26. That's more so what I'm talking about there. But it's again, my point is that once Wall Street gives a name to a meaningful trade, the move in that trade has basically all but been happened.
Well, they're preying on people wanting to make it so they can tell everybody they're smart and say, "Yeah, I'm making a debasement."
Yeah. I mean, it's the same idea as the financial magazines when they mention it on the cover, whatever it is. That usually says on the top's in, right? I mean, same idea basically. It's just saying, hey, listen, mainstream, big wigs in charge kind of have figured out what's going on here, and they're saying it publicly now.
Well, it's buy the rumor, sell the news, right? Right when you hear it, sell it.
Yeah, exactly. Yeah. Did silver just hit an all-time high? Yes, it did. A little bit earlier there in the chat. I know Fibo mentioned it. So silver hitting that new all-time high, doing some damage there. Like I said, up something like 65% this year, doing better than gold.
Yeah.
Don't see what's his name really mentioning that a whole lot, just occasionally.
No. What's his name? Rob Schneider?
Schiff. Peter. Schiff, your buddy, your best friend.
Yeah, Peter.
Your neighbor over there in Puerto Rico.
Yeah, Peter is I mean, again, I don't know why or how Peter has the profile that he has. It's the most transparent talking your book that I've ever seen.
Another way to say it that's nicer is you talk about what made you rich. That's really like, listen, you go talk to anybody that has made any money in these crazy coins. Like, Shibu Inu, and they have Shibu Inu all over their houses. They've got pillows of Shibu Inu. Their license plate says Shibu Inu. They're in love with why? We made them rich.
It made them. Yeah.
I mean, what else are you going to have loyalty to other than that? But I want to point out a tweet that I made earlier in the week that blew my mind. And it points to what we were talking about earlier in terms of like this microwave society. Everybody wants the huge gains, but there's AppLovin plus 3,000%, Celestica up 2,800%, Palantir up 2,300%. Like there's Strategy up 1,617%. Strategy is 6th on the list. So all the talk about Bitcoin and all the talk about the volatility of Bitcoin markets and stuff, TradFi still is just as crazy, if not crazier. I mean, Nvidia, Iron, Robinhood, IM Gold up 1,107%. So markets are showing us something about human psychology in the day and age that we live in. And it's kind of like, if it ain't a 10X, don't talk to me about it. I'm serious. I mean,
you're not wrong, man. You're not
like
wrong.
50 10Xs that happened in the markets over the last 3 years.
Well, and it's been crazy because we didn't really see that kind of movement in stocks, not nowhere near like we have. But since COVID, it was everybody got stuck at home. Government made them sit at home, said they couldn't go to their jobs, gave them some stimmy checks. And all of a sudden, the stock market starts doing really crazy stuff, right? And it hasn't stopped now. We've since gone, people are going back to work, no more stimmy checks. Stocks are still acting the fool now. So, I mean, you look at GameStop and AMC, and then you get into others like you're talking about now, right? Coors, Iron, all those. And it's just, for people like us that have been, watching this well before crypto ever came out. I mean, you can see this change in the market since COVID. And so
that's a great point. I didn't even think about COVID being the impetus for it, but what if it was the taste of freedom that everybody needed? And then they started looking around for, how can I make money and stay at home? And the markets are that. I mean, that's why I fell in love with the markets.
Well, that and even the hustles, right?
And the hustles.
Exactly. Hustling on the side there, doing all that side stuff. And that's become kind of a way of life, even though you end up just burning out. You're basically working so much, right? But I mean, the thing we've always been taught not to say in markets is it's different this time, right? We've always been told that. But structurally, and this is something I pointed out in so many different ways, in terms of the market, in terms of unemployment, in terms of all these things since COVID, have been so different. I think when we look at everything else we've been talking about here and how the system, as Andrew said, constantly changes, continues to go on there. And as we're pointing out, becomes more and more toward this 24/7. You have to look at it and go, well, structurally, things do seem a bit different.
Do you think Goldman Sachs gets into the exchange business?
No.
No.
There's no money to be made in the exchange business. Everything reverts nearly to zero at all times. That's the reason why.
Yeah, but how do you say that when Robinhood prints cash on their
Robinhood is a broker dealer? They're not an exchange. Robinhood's a broker dealer. So their orders get routed onto the actual exchanges, right? So that's the reason why Intercontinental Exchange owns all of the actual exchanges where,
okay, so my question revised is, do you think Goldman Sachs will be a broker dealer?
They are a broker dealer.
But are they going to be a forward-facing crypto exchange is my question. You don't think they'll get into this game?
No. They'll get into the game as
mergers and acquisitions. Big.
No. And here's the reason why. They tried to expand their world away from investment banking / ultra high net worth wealth management. They bought a company called United Capital. United Capital was an RIA that served mass affluent type of customers. People with $400,000 in liquid assets to $2 million in liquid assets. All right. They bought that company that had operations across the United States. and it was an absolute flop disaster. They don't know how to do that kind of business. So that, along with other versions of trying to be, so here's another example of that. They were the background quote unquote bank on the Apple Card. They're about to not be anymore. Why? The Apple Card's moving to JP Morgan. So
where did you hear that? I always thought it was interesting that they were on the back of the Apple Card. I have an Apple Card, and when I got it, I was like, "Man, this is quite unique. I've never seen that before."
Yeah. So I don't know. A couple of weeks ago, it came out, or a month ago, it came out that it was shifting over to JP Morgan. So they've tried other things to try and widen the quote unquote piece of the pie that they're getting associated with the world of finance. They're just not any good at it. And so
how do they stay relevant? How are they going to stay alpha? Because it seems like the IPO launches of the days of old is how they ate. And I think that's all going to die.
Well, so a couple things. One, in the same way that Morgan Stanley did this, UBS did this, Merrill Lynch did this, and others did it. They moved away because the ground shifted underneath them, and there's less and less IPO business and investment banking to do. They had to lean into the wealth management part of what they do and make it a bigger part of their profits.
But doesn't that go hand in hand with the front-facing portal with 24/7 tradable access, Goldman Sachs branded? I mean, isn't that that's what I'm trying to get to, is how
it's also just not their customer base, man.
They don't get it. It's like, tell me every quarter what's going on, not not
think
manual.
about it. Let's say that my dad had, $800 million. He doesn't. But let's just say that he did. So my dad's 73 or something. My dad's not going to log into his Goldman Sachs crypto app and do anything ever. It's just not going to happen, right? No matter how much money he has. That's not how that generation does things.
Yeah, but aren't the companies bracing for the wealth transfer from the boomers to?
But the way that they're doing that is they're simply saying they're training their wealth managers to be able to talk to the next generation and make that transition based on relationships. Now, to be fair, a decade or so ago, maybe 12 years ago, there was this big movement in wealth management that was, effectively robot wealth management, right? To where
I remember,
So you had different, types of organizations that
it's just reallocations, automation.
Yeah, you just put your money in there and you click a couple buttons, and it was doing things for you without well, those still kind of exist, but they're not anything. They are nowhere near what people thought they would be, because the relationship still matters, right? Yeah. Unless you're a person of deep faith, effectively the most important thing to you, if you have money, is your money, right? So you don't want to give up control of that to anybody or anything. And so you want to be able to have somebody to go to and say, what happened here? Or it's going well, or I'm thinking about.
You know what my dad calls that?
What?
He wants a single neck to choke.
Yeah, exactly, right? So there you go. That generation, and probably one just underneath them, you gotta
have that single neck to choke.
Matters.
Who am I calling when there's a problem, right? Yeah.
Exactly right.
Yeah, see, that was the same thing I was saying about the legal profession too, because with AI coming in here, it really takes out that that first year associate kind of work. It takes out a lot of paralegal work. But I said, listen, you're going to still want that human touch, and maybe even more so there, because it's going to be like, when my life's on the line, do I want to trust?
Yeah, but here's the problem with that theory is that, you're just going to be left out of things that are almost too good to pass up. Like, for example, you've got one bank, okay, traditional bank A. You put your money in that checking account as a business. You use that money as cash. You need debit cards, blah, 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 payroll, blah, all that. Well, that's earning you literally 0.04% interest. Nothing. It's just sitting there dying quickly. You put that same money in Coinbase and you get 4.5%, literally 100 times the interest rate that you get at a traditional bank. That, I think for people, once they understand it, are going to go, holy cow. Then on Coinbase, you can go now, and I'm blown away with the improvements on Coinbase's app recently. So then on Coinbase, you can go, okay, I want to participate in the Earn program, which is you can lend out your USDC and make 7.5%. And it says, this is DeFi protocol. This is blah, blah, blah. Explains you the whole thing. Talks about taxable event, like the whole 9 yards. It's all integrated into your Coinbase app, single button. All the smart contracts are hidden, the signatures, everything is so unbelievable. And if you get behind the curtain of what you're, by the way, there's no withdrawal restrictions. So you put your money in, you get 7.5% interest. You can pull it out a month from now. The flexibility of that and the interest rate attached to it, like you almost have to be an idiot not to use it. I mean, that's such a competitive advantage to all the traditional finance markets and the banks. It's nuts.
Yeah, but I think there's always that room for that human touch. And I'm not saying that there's going to be strictly human only and strictly AI. I think there's going to be that combination of both. But
they're
I think
solving it in their own way, though.
Like
like on that Coinbase app now, in the thing, you can click concierge, and there's a person chatting and willing to call you right then on the button. Like they're going to have to adapt. I agree with you. People are needed. Yeah,
I mean, we're still human beings at the end of the day, right? And it's still part of being human is still that connection to other people, right? And I think that's always going to be part of that. But before we get out of here, I want to talk to Andrew here real quick. So we've got the Trump administration saying, "Hey, listen, we want to get rid of quarterly."
I got to actually jump on another call, guys.
All right, you're out of here early. All right, man. But yeah, so what do you think about that, man? I mean, how do you think that affects the markets going forward? Because, again, we're talking about 24-hour markets now. And if you don't have quarterly reporting, okay, so now you don't have the effects they were trying to keep from happening by, reporting after hours and early hours and whatnot. Yeah, I mean, do you think we get to that point where we don't have quarterly reporting? And if you do, what kind of effect do you think that has on the markets?
I think it's a neat headline. Nothing meaningful has come out about that other than the headline. There's been no movement by regulators of any sort in that direction. I'll believe it when I see it. That's moving backwards instead of moving forwards. And so that's very rare for financial markets to move backwards as opposed to forward. So yeah, I'd be surprised if eventually that came to pass.
If it did, what do you think that kind of impact it would have? I mean, 'cause it seems to me it'd be somewhat significant, at least at first.
Yeah, I mean, I don't know. There's so much information out there nowadays that, quarterly reports probably 7 times out of 10, even when you report a really great quarter, the analyst and the street is more interested in your projection of the next quarter rather than what you reported in that quarter. So, information is, think about this, 20 years ago, everybody read the newspaper. Think about that now, like the very idea of reading a newspaper about what happened yesterday when we get things effectively in real time at all times now doesn't make any sense. Like, why in the world would I have a newspaper subscription? What value does it add? Nothing, right? Yeah. So, same thing with quarterly reports. Like, okay, again, that's the reason why most of the action in a stock price on a quarterly report comes from the projections for the next quarter. Right. And how does the CEO or CFO sound about where the business is headed in the next 3 months as opposed to what it did in the previous 3. So there's my answer.
Oh, I like it, man. I like it. All right. Well, we're here at an hour, so I guess we'll get out of here. As always, appreciate you guys joining in. I hope everybody understands what kind of, access to information they're really getting here. You're not just some Yahoo I pulled off the street who opened his first chart, a year ago.
Sure.
You have a big background there in TradFi, and of course, Tillman also there in mining and crypto and whatnot. And so,
yeah,
I just hope they really, listen in here a lot and get what we're talking about, because I think there's a lot to be garnered from it. As I like to point out, we've been doing this just over a year now, and a lot of the stuff we talked about, people kind of laughed about, back there at the beginning. And even for us, we're surprised at how quickly it's happened. We were like, yeah, maybe here coming up in a few years, and it's happened.
We've been doing this for 18 months, I think. I mean, it's closer to 18 months than it is 12.
Oh, I guess it is. Yeah, May. Yeah, May was a year. So, oh man. But anyway, listen, y'all, you can catch us every Wednesday here. Same time, same channel, same place, wherever you're looking there, trying to get this simulcasted everywhere. I'll try and get it simulcasted more across some other platforms as well. Do me a favor, follow these guys. If you're on X, you can follow Andrew there at AP_abacus. And you can follow Tillman there if you choose to do so. Be careful with that. At TexasOL61. You can follow me at TXWest Capital. Also, be sure to check out their company, Arch Public. You can follow them on Twitter, X there at TryArchPublic. Or is that what it is? Yes, TryArch Public, right?
Yep, TryArch Public. That's correct.
And then the website is archpublic.com. Check them in there. And, of course, you can check us out at members.texaswestcapital.com. Y'all, have a great week. Trade safe. Remember, as Tillman said earlier in the show, the only thing you control is how much you lose. Y'all have a great week, and we will see you next time. Take care, everybody.
Trading tip: always manage risk before chasing gains.